Let's go over the trades on the day. We went with the micro portfolio today. We did not trade the normal 200K and 50K. The normal 200K was down 6,000. We didn't trade that. The normal 50K was down 1450. We didn't trade that. What we did trade right now is the we have one position still open, and the micro NQ20 for the 50K 1 unit. Real results are about minus 250. One position still open. And then we had 2 units of the micro NQ20 for the 200K. So that should have been minus 500. We had an extra $2,100 because we had to transition. And so there was a fast move right at the open yesterday, and we had positions. We had open positions from the existing 200K and 60-minute breakout short, which was stopped out. And we had a gold strategy that we exited. And then this market moved so quickly. When we turn on automation, we missed this move right here. And so when this got short, we wanted to wait it out, but we had a situation where the portfolio was, we were long and the portfolio was flat or short. And so that's what made it difficult to, we went on ahead and took this trade. And so that's where we are. I expect it to sync up a little better tomorrow. But you know, my opinion, this market is really broken to the upside with the excess liquidity. Never seen a market that trades like this. It's so volatile as far as the inability to go down and always fight the short side. And you know, after doing this for 20 years, I've never seen so many comebacks against the shorts, and it's pretty extreme. And so FOMC today, they were hawkish, and as soon as the Fed finished, the market took out yesterday's day session lows. Fed finished, and then the market started to rally, but has chopped around here, propped up price action. You see how it took out the day session lows. It did not take out those lows in the after hours. Microsoft earnings came out last night, and the market sold off another 250 points, and then had a sharp rally last night. And so lots of reversals still. Have not seen this many reversals in this wide range. Let's look at our indicators. I'm going to show you something else that looks broken to me. So if we're taking a look here at this volume sum day indicator, we're summing up the volume from the beginning of the day. Started the net sell in here. And so the indicator represents the net volume from the opening, summing up the up volume and down volume. And we're getting the markets up here making highs as this volume indicator continues down. We saw this 2 days ago at the close, and the market continues to run up here as the volume is making new lows, and that selling pressure eventually caught up, but just the sheer chop of getting there made it difficult. You see the price movement indicator up at 400,000. It's been around 470,000, so a little bit lower today because the market kind of went sideways while it was waiting for the FOMC before it was volatile. So not quite as much movement the last 2 days. But let's look at these trades here. You see, for example, we had this. We had the short trade, short trade, short trade. The market started to go down. Short trade stopped out. Let me expand it. This is one of our aggressive systems. Most of these systems don't trade this aggressively. So short, stopped out, short, stopped out, short, stopped out, short, stopped out, short, and then it's still trying to fight back. And then tick pulse did the same thing. We don't typically trade this much on one bar, but the ranges are so high we're not used to getting stopped out on the same bar, so it's re-entering a bunch. And so this one was down a lot too. Tick pullback was down a lot, trying to take the long trade this morning because you're getting stopped out and re-enter on the same bar because the ranges are so massive. And so the good news is that the trades on this were down 250, only 250. With all this volatility today, we're kind of in that de-risking, come in out of the rain mode, and we de-risked. And so here's tick pullback, taking a lot of these trades here, getting stopped out, trying to capture the up move. You can see it's trading in the right direction, but the stops are so tight and the volatility is so large. Watch out for a flash crash if it takes out these lows. The market is putting a lot of energy into propping it up right here. There's so much energy reversing it Monday, and then yesterday, you don't see this on the day session. I want to look at the 24-hour session. So let's look at the 24-hour session of the NASDAQ. This is the micros that we're trading now. 1 unit on the 50K, 2 units on the 200K. you see that Monday, just a massive reversal on this day, that volume still went more selling volume as the market rallied here. And then yesterday, the day session closed here, and then earnings were going to come out after the bell, so the market sold off, and then earnings came out, earnings call, boom, the market popped on Microsoft, went sideways, popped again. A lot of energy in the market selling off here. You see how much chop is just right here to support it above yesterday's lows. Never seen so much energy trying to hold the market up against what it's trying to do. It's natural to sell at this point. And there's an agenda to keep the market up at certain levels. And so if it does not work out, if this market does trade below the week lows, could see some accelerated selling. We'll see. But let's look at the trades. You can see all the trades here. We are, AT 2020 got stopped down alongside. In spite of all this, I mean, this is based on 8 contracts. In spite of all this, went almost all the way back to break even after this nice long trade. All this chop is almost all the way back to break even here. And then this sell-off got us back up in a nice, decent amount of profit. So this will exit 5 minutes before the close at 3:55 Central, 4:55 Eastern. AT 2022 stopped out. Cobra 3, 10th trade in a row, stopped out. You see what a 30-point stop loss looks like in this market. Typically a $600 stop loss on the E-mini NASDAQ. $600, if that sounds like a lot to you, I would not trade NASDAQ futures because the market just travels $600 in a few seconds. So wide range here to prop it up. You see those wide ranges. Let's look at how wide those ranges are on 15-minute charts. You see $4,000 15-minute range, $3,000, I guess a $3,000 15-minute range or so on these others. So massive ranges, reversing markets. And so those are the trades on the day. That's what I wanted to share with you. Let's look at the market internals too. The VIX went back up. NASDAQ down on the day. The ticks. The advanced decline line went from positive 23.17 down to minus 13.56. And so if you saw the minutes, saw the Fed statement, not the minutes, but the Fed statement in the meeting, you realized the Fed was the market initially surged, and then the market realized the Fed was, I guess, hawkish. So on Microsoft earnings and what they wanted to be dovish, they rallied because they wanted the Fed to be dovish. But the Fed was hawkish in its statement, but not as hawkish as it should have been. The market, a lot of I guess top economists talk about the interest rates, inflation, and how the Fed is behind the curve, and how the Fed ought to be even more hawkish. They ought to reduce their balance sheet. They ought to raise interest rates quicker, and they're going very, very slowly. And so initially the market liked that, but and then it sold off. So I guess it sensed some reality. And then you see the advanced decline line reversal of the ticks. Right here when the market rallied to new highs, the ticks did not come up to plus 1,000. It came close to plus 1,000, but it did not cross plus 1,000. So then it rolled over. So Micro NQ20 for the 50K portfolio, and then for the 200K portfolio, trading 2 units. And so trades on the day for Wednesday, January the 26th, 2022 FOMC meeting. Watch out for flash crashes. De-risk, trade small or not at all. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.